Hello guys, welcome to another trade recap and forecast. So let's get started. I did take some trades, very interesting and high probability setups. But first we're starting with the euro and the US dollar. So let's see, last Wednesday was here. Okay, we got this V reversal in the range. I was thinking price will go up after it. That didn't happen. Instead we started ascending on the top. So got this overall ascending channel, and then we did reverse in the opposite direction, as you can see here. So did I have a order on for a reversal setup? At this point I did not. So I was looking for the price to come to my level in a slow manner like this. Okay, so this didn't fit my plan. Then what happened? Well, we kind of ranged around right here, as you can see, and then we broke down with one large candle. Was I looking for a flag or a break and retest here? Well, for a flag I was not. It was just a single push. Looks like a news candle. Usually after this big news candle I want to see price continue. I want to see price give me one more bearish leg, which didn't happen. Okay, I would have potentially taken a break and retest, but that didn't happen either. Instead we broke the low and we retraced, as you can see here, and now we're kind of descending a little bit range bound. So this pair is not on the watch list and I'm being more patient with this one. There's a couple of scenarios that I'm thinking in my head. First one is I want to see it descend a bit more, give me a clean descending, and then look for a reversal trend, look to buy on the uptrend. Then I'm thinking of just waiting for possibly this momentum to kick back in as well. Maybe get a large push down, look to sell in that scenario. Or maybe get a large push up from here. In that case, it will be kind of volatile. Large move down, range, large move up. I would think about it. I would need to think about it because it's not looking that high probability because of the prior price action. So leaving this one alone for now, okay? Leaving it alone. Then we have this euro and the Japanese yen trade. So last Wednesday recap was here and I did take a setup. This to me was a 10 out of 10 no-brainer. What was my reasoning? Well, we first had a V reversal right here, range push up, so that is high probability for the price to go up after a V reversal. And then you get an established uptrend. So large move up, no shift, large move up, no shift, push up. Okay, a little bit of a wick on top, not a concern. My buy limit was on the top of this high, 13 pip stop loss, 1 pip above. My order is 1 pip above for spreads. Just look at this established uptrend. Again, the candles, large body candle, clean close here, clean close here. Nice candle here, okay, as well. Pullbacks, one candle pullback, two candle pullback, no selling pressure. Absolutely perfect, no brainer, 10 out of 10. Order is on 100%, taken in, and then price pushes up. We follow the price with the trailing stop loss rule. Okay, it was running some nice percent right here, but then my stop loss was down here and I got taken out for around 2.5, I think it was. So it was around plus 2.5% on this trade. I'm risking 1% on every single trade on my live account. Unfortunately, my fund engineer account is currently not active, okay, because they're migrating accounts. At least they're saying they're going to migrate accounts. Let's see if that happens. So for now, I'm not trading the fund engineer account, unfortunately, but it is what it is. Doing my live account as well, which is nice. It's a substantial live account, and I did make nice percent here. Okay, we can exit the bar replay. Let's see what happened next. Another V reversal right here. As you can see, here is the V, here is the range. Okay, here is the push up. Now right here, this is not a big impulse up. It's not that big, I have to say. So I wanted to see a break and retest like this. I wanted to see a break and retest scenario, break and retest setup. But what we actually got is we got a flag, which did not look that great. So let's see it. Let's play it. Okay, first high, First low, second high, second low. Blue candle is the entry candle. For me, there are a couple of warning signs with this setup. Okay, first one is this momentum by itself not that strong. Compare this momentum to the legs seen right here. This is much stronger. Then you get a bit of a wick on top, and then you get a bit of a shift. So I'm seeing a bit of selling pressure. This flag formation is not looking that clean. It's not really flat. It kind of looks like a straight move down, okay? So I'm seeing some selling pressure, and when I weigh up all of the pros and all of the cons, it was Tuesday as well, so Mondays and Tuesdays I'm a bit more careful with the setups that I take. I didn't want to risk it. For a break and retest, my level would be here. I didn't want to take that either. What was my reasoning? Well, because personally for me, again, not enough of a push, wick on the top, and then you get this selling pressure going down, so it's not looking high probability in my personal opinion, and the flag would be a loss. The break and retest from this level would be a loss as well with my 12 pip stop loss, or 13 pip if you add a pip for spreads. What am I seeing now? Well, price just kind of went back into this range bound price action, so I'm expecting, this pair is not on the watch list, I'm expecting something like this to happen. I'm expecting a larger, wider range, to be honest. What I want to see? Very simple. I want to see a breakout up, nice large breakout, or I want to see a breakout to the downside like this, nice large push down. Okay, so large push up or a large push down, that is what I want to see on the euro and the Japanese yen. I'm expecting price to range. Again, be careful in these areas. Price can easily push into them and retrace. Those are areas full of liquidity. And I think we can move on because I do have one more interesting trade on the Aussie US dollar I want to cover. So last Wednesday, let's identify it. Last Wednesday was here, okay? We did get a push. Prior price action was pretty crappy. We did get a push, triple wicks on the bottom. At that point, I was not interested to look for sell setups. Price push up, price pushed up, broke the high, retraced, broke the high, retraced, went down, and then I did take a sell setup right here. So let me explain what was I seeing. Well, I was seeing some large... Okay, let's first cover the prior price action. Prior price action, pretty bad, pretty range bound, so not high probability. But then I saw some nice bearish momentum right here. Look at the legs. News candle. What I know is when you get a news candle and then price continues down as it did here, usually you get a nice downtrend. That is from my back testing and live trading experience. Large push down, 2 candle pullback, price breaks the low, clean close on the bottom, and this was just a no-brainer for me, okay? Even with the range bound prior price action, I was willing to take the 1% risk on this trade right here. I know some people, some traders were concerned about this first pullback candle. They saw it as an aggressive retrace. They saw major bullish pressure inside of it, right? Look at the size of it. And it was Tuesday, so on Mondays and Tuesdays, we're usually a bit more careful. Now, I did weigh up all of the pros, weighed up all of the cons. For me, it was still worth taking even with this aggressive retrace. So I know some traders didn't take it because of this. For me, I was still willing to tolerate a aggressive retrace to my entry level. So I did have my order on. Okay, and then price here, this was spread hours. So I didn't get tagged in here. After spread hours, I put my order on back into the markets because during spread hours, the spreads expand, the volatility gets higher, or actually no, the spreads expand, so you could get taken out for much more. You could get taken in at some weird levels, you could get taken out for much more than you initially risked. The spreads can go from 1 pip to like 20, 25, 30 pips on New Zealand Japanese yen, maybe even 40 to 50 pips during spread hours. So during spread hours, if you're in a position, put your stop loss well away from the current price, or if you have a pending order, remove the pending order once the spread hours pass, put your pending order back into the markets. That's what I did. So had the pending order, removed it during spread hours finish, my order is back on, get taken in and get taken out for a 1% loss on this one. So in the last week, plus 2.5, minus 1, so that's a net plus 1.5%, okay? Yeah, so weighed up all of the pros. The pros were a large momentum, small pullback, no bullish pressure, news candle, then we continue. Clean close on the bottom, nice break, right? Let's see it. So 10 pip break. Negative was range bound prior price action and the aggressive retrace to the entry level. So when I weighed it all up, it made sense to me to take. Also, one more warning sign was that it was Tuesday. Okay, that was a warning sign as well. When you get an aggressive retrace on a Monday or a Tuesday, it can be a bit tricky. Okay, so it's up to you to do your back testing, do your research, and then make a conclusion for yourself. And follow your trade plan to the T. And yeah, basically just keep executing. The probabilities will eventually play out. Okay, right now broke the high, went up. This is not giving me any potential. This pair is not on the watch list. I'm not seeing much that I can exploit right here from this price action. Again, we broke up and completely reversed the trend. The trend was down. We now reversed it to the upside, but price action is just messy. And I want to see just price to clean up. Possibly continue with the overall bearish momentum like this on a larger scale. Okay, maybe. Or push up with large momentum. Maybe I would take a trade. I'm not sure, because then you have lots of volatility. Okay, you have a large drop, range, large push up. That's volatility. Would I take a break and retest right here? I don't think so. Price action is not telling me that this really wants to go up. These candles are small. They're not showing much strong momentum, so I don't think I would take a break and retest. I would definitely not take a flag here. Okay, so that's it for my AU analysis. Moving on, Aussie Japanese yen. This one is looking a bit more interesting. Okay, I didn't take any trades. Wednesday was here, range bound, range here, push up. Okay, at this point I think it was NFP last week, was it? I think it was, so I wasn't looking for much. Yeah, this was during NFP. I stopped trading at around 1 to 2 a.m. on an NFP Friday. Okay, that is one of my rules, my new rule, because most of the time I noticed if I'm in a trade right before NFP, if I take a trade like 7 or 8 a.m. on a NFP Friday, I usually get taken out for break even or even more than I risked, because you get this large moves, you get this large price action, okay, large volatile price action, spreads expand drastically, so it's a dangerous thing to trade during NFP. I just stopped trading 1 or 2 a.m. on NFP Friday. I want to keep it safe, want to keep my capital safe. Risk management is of course my number one priority, okay? So let's just check what's happening since it is the top of the hour. Okay, so let's go back to AJ. We opened again on Monday, pushed up, pulled back, broke the high, retraced. Messy price action. Right here I was looking if we can get something, some sort of a continuation, right? Okay, this high is the same. I'm still looking for a continuation here, okay? So this line is wrong. These highs are the same. This is 570, 570, 576. This is still in play. I like this momentum. Price action, not that good. You could make a case for a descending. I would not. This is not looking that clean, but the momentum itself is looking nice. If we get a one candle pullback right here, push up with momentum, retest the high, order is on, and I would be interested to look for buys. Would I look for a flag? Maybe a tight flag like this. Very tight, very small flag. Maybe I would take it, I'm not sure. Again, we're kind of now leaving a wick to the upside. We're kind of slowing down as well. You have two candles not really moving anywhere and not giving us a clear pullback. So I'm going to be a bit more careful, but I would like to see a small pullback, push up, and then a retest of the most recent high. That would be a play that I would be interested in taking. What can also happen? Maybe price will continue up with much more momentum. I would look for a flag up, or we can create possibly a V reversal like this, look for a range, look for a push down, and then look to sell somewhere in this leg. Okay, so we know when we get a V, a range, push down, we can look to sell. That is a high probability setup. It happened on the Euro Japanese yen. We just covered it, so make sure you watch it again if you're not sure what a V reversal in the prior price action means. This pair is not on the watch list. Pound US dollar. This pair I'm gonna actually put on the watch list. Let me give you my reasoning. So let's see, last Wednesday was around here. We were flat, we were range bound. This was not showing me much potential, to be honest. Okay, then we broke the low with momentum. Ranged around, broke the low again with momentum. So now what is of interest is this price action right here. That is what is interesting to me. So we definitely got a nice push down. Yeah, we did break the structure. We broke the high here. We kind of ranged around, but then momentum kicked back in again. So for me, I classify this price action as a downtrend with a break of structure. So this is to me high probability to continue going down. If we get a flag here, potentially I would take it. I would like to see a bit of a range and then a flag to form. Or I would also like to see price pull back here, break the low with momentum, retest the low, look for a break and retest scenario right here. That would be very, very interesting. That would be, in my book, really high probability. That is why this pair is on the watch list. I'm gonna put AJ on the watch list as well, okay? In the case that this continues up. So these two pairs are currently on my watch list for today. And let's see if a flag forms here. So I'm looking for a sell setup on the pound, looking for that range and then a flag, right? Okay, range and then a flag, or looking for a break of the low with force, retest of the high. If we decide to go up, I will completely reevaluate my situation, look for possibly a V reversal and a push up, and then look to buy on this leg. But I don't think that will happen. I haven't seen much V reversals on the pound, to be honest, and when they do happen, it's usually a lot of volatility and not a lot of high probability price action happening. Yeah, so these are the legs that I want to see on the pound. I know I often talk about what type of momentum I want to see, and this is it. Large momentum. This is a nice push. It's a single candle, so it's a news candle, but it's a large push as well. This is large momentum. I did take a flag setup here, so this is what I'm looking for. This leg is what I'm looking for. And yeah, that's about this leg. Okay, this leg is nice. That is what I'm focusing on for the pound and the US dollar. So, final pair, New Zealand Japanese yen. Let's see what happened. Last Wednesday was around here, okay. Somewhere around here. Okay, so NFP I was wrong. NFP Friday was here. Okay, so I know I said that NFP Friday happened here, but it did not. Okay, my mistake. It happened the week before. But on NJ, what was I looking for? We had a really clean ascending structure. Really clean ascending. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 consecutive breaks of the high. I was very, very interested to look for a reversal setup. This was very high probability in my personal trading plan. Unfortunately, it could not be sustained, okay? So we did not get a reversal. Instead, we got some major bullish pressure. It can happen, okay? So it's not guaranteed that when you get a ascending that is as clean as this, that you will get a reversal setup, okay? There's no guarantees in trading. It's all about the probabilities. On a large sample size, on 1 year of data, when you take certain setups, you're gonna make a lot of percentage, okay? So it's only about the probabilities. There was a flag set up here. This was the flag. There was an established uptrend. And then we did get a nice small tight flag. I personally didn't take it, a couple of reasons. Okay, first one, this wick. Large wick, I want to see a bit of a range. There was no large range here. So after this huge or large wick, this doesn't fit my plan. One more thing, it was 1 p.m. on a Friday, and after 12, so afternoon, on a Friday, I usually am more careful. Okay, I'm more careful when the noon passes on a Friday because setups just tend to range around like this, and then market closes, and when it opens, the spreads are high, the current price, there can be a gap, and I can get taken out for much more than I initially risked. So it's all about risk management in the end, and that's one of my rules. If I get a super extremely high probability entry setup that will just tap and go, in my experience, that can just tap and go, well, then I might just take it on a late Friday. And I stop completely trading on a Friday on 5 p.m. in the afternoon. Okay, that is my complete cut-off time, but after 12, I am starting to be a lot more patient and a lot more careful with the setups that I take. Okay, broke the high, retraced. This flag would be a loss. I didn't take it mainly because of this wick. If it wasn't late Friday, I still think I wouldn't take it because this wick was very large and we did not get a range in this price action. Broke the high, retraced, broke the low, retraced. We were descending here, not the cleanest descending, but still correctively breaking the lows, as you can see, right? Breaking the lows, leaving wicks, leaving a large or a huge wick right here. Then we range around a little bit. Break the high, retrace, break the high, retrace. Was this a good setup to me? This one, a break and retest. Okay, because we did have a descending channel. So maybe some of you were looking for a break and retest setup. I personally was not. Momentum was not enough. Okay, so the momentum here is not enough for me personally. These two candles are not large. And then you break with just one small candle, 2.3 pip break as well, really small, not a lot of momentum, doesn't fit the plan, so I did not take this setup. If price does continue up, because we did have, as I mentioned, a descending channel right here. So if price does decide to continue up with momentum, I will be looking for buy setups, but I need to see large bullish pressure. Okay, I need to see that large bullish pressure to confirm to me that the buyers have really taken control and that this descending channel is now playing out. So that would be of interest. I want to see that large push up, then I look for buy setups. If we go down, I just expect range bound price action and I'm leaving it alone. Okay, is this pair on the watch list? No, it's not. Currently it's not. Again, this is looking not a lot of momentum. It's looking a bit messy. I'm expecting for the price to kind of range in this general area. So I'm expecting actually for this to happen. And I'm leaving this pair alone. I'm being more patient on the New Zealand and the Japanese yen. Let's recap this situation. Aussie Japanese yen. Let's see if we can get a push up. Looking for buy setups. Pound US dollar. Let's see if we can get a nice sell entry scenario. Nice sell entry setup. That is about it for today. Took 2 trades, very good trades, very high probability, no brainers in my trading plan. And that will be about it for this video. Hope you guys enjoyed, hope you took some value, hope you learned something as well. Have a great rest of the trading week. Happy Valentine's Day as well. And I will see you guys in the next video.